Have you ever wondered how to be successful in trading stocks for a living? The world of stock trading, pulsating with numbers, charts, and a myriad of companies, is an enticing realm that promises the potential for great returns. It's not just about buying low and selling high, but a complex game of strategy and insight. Now let's dispel some common misconceptions, shall we? Stock trading isn't a shortcut to wealth, nor is it akin to gambling. It's a calculated risk, a career path that requires dedication, knowledge, and a clear strategy. It's about understanding market trends, making informed decisions, and managing risk. The allure of stock trading lies in its potential to turn intelligent, informed decisions into a lucrative career. Now you might ask, how do I become a successful trader? That's exactly what we're here to discuss. Firstly, understanding the stock market is crucial. Imagine it as a grand bazaar where buyers and sellers come together to trade shares of public companies. It's a marketplace bustling with activity, driven by the dual forces of supply and demand. Now let's delve a little deeper. Stocks, or shares, represent ownership in a company. When you buy a stock, you're essentially buying a piece of that company. You're banking on the company's success and its ability to generate profits. Stocks come in different flavors. Common stocks, which give you a stake in a company's success and possibly dividends, and preferred stocks, which give you a higher claim on earnings and assets, but generally don't come with voting rights. Now onto market trends. These are patterns that emerge in the stock market's performance over time. They can be upward, downward, or sideways. Spotting these trends and understanding what causes them to shift is a key part of being a successful trader. But what influences these market movements? A myriad of factors. Company earnings, economic indicators, political events, and even sentiment and speculation can send the market soaring or plunging. It's like a giant, complex puzzle where each piece influences the other. So how do we make sense of all this? Through careful analysis. Fundamental analysis involves evaluating a company's financial health, industry position, and market conditions. On the other hand, technical analysis uses statistical trends such as price movement and volume to predict future performance. The stock market isn't a game of chance, it's a game of strategy, analysis, and understanding. It's about making informed decisions based on the information at hand, not just following the crowd. Remember, the stock market isn't a gamble if you understand it well, so take the time to learn, to understand, and to strategize. Your success in the stock market isn't just about making the right moves, it's about understanding why those moves are the right ones to make. A successful trader always has a strategy. This isn't just a saying, it's a fundamental principle of the trading world. Imagine setting off on a cross-country road trip without a map, or attempting to build a house without a blueprint. You might make some progress, but chances are you'll end up lost, frustrated, and with a whole lot less in your pocket than when you started. Trading is no different. Without a well-thought-out strategy, you're essentially gambling, not investing. So, what makes a good trading strategy? First and foremost, it starts with a realistic goal. Whether you're aiming for a specific return on investment, looking to diversify your portfolio, or seeking to capitalize on market trends, your goal should be clear, achievable, and tailored to your personal circumstances and risk tolerance. Once you have your goal in sight, the next step is to build a plan. This is your roadmap, your step-by-step guide to reaching your trading destination. It should include the type of stocks you plan to trade, the conditions under which you'll buy and sell, how much you're willing to risk on each trade, and a host of other considerations that align with your overall objectives. Now, having a plan is one thing, but sticking to it is another. This is where discipline comes into play. The market can be a wild ride filled with highs and lows that can test even the most seasoned traders. But remember, a good strategy accounts for these fluctuations. It's designed to weather the storm. So, hold your course and resist the urge to deviate from your plan. Patience, too, is a cornerstone of a successful trading strategy. Rome wasn't built in a day, and neither are fortunes. It takes time to recognize patterns, to learn from your mistakes, and to see your investments grow. Don't rush the process. Trust your strategy, stay disciplined, and be patient. A well-formed strategy is your roadmap to trading success. It's your guide through the twists and turns of the market, your foundation when things get rocky, and your compass when the path forward seems unclear. Remember, a successful trader always has a strategy, and now, so do you. Risk management, the key to longevity in trading. Let's dive into the world of risk management, the unsung hero of successful trading. It's a topic that doesn't get the spotlight it deserves, but it's a cornerstone of the trading universe. So, what exactly is risk management? In essence, it's about understanding and managing potential losses. Yes, you heard it right, losses. As much as we all love the thrill of the win, we must also be prepared to handle losses. In the world of trading, the tide can turn in a heartbeat, and the ability to manage these unexpected twists is what separates the successful trader from the rest of the pack. Now, let's talk about some risk management strategies. First off, we have stop-loss orders. A stop-loss order is a trader's best friend. It's like a safety net, ensuring you don't fall too hard when things take a downward turn. It allows you to set a predetermined level of loss that you're willing to accept. Once the stock hits that price, your shares are automatically sold, preventing any further loss. Next on the list is diversification. You've probably heard the phrase, "Don't put all your eggs in one basket." Well, that's exactly what diversification is about. By spreading your investments across different sectors and asset classes, you decrease the risk of a single event wiping out your entire portfolio. Finally, we have the golden rule of trading. Never invest more than you can afford to lose. This might sound like a no-brainer, but you'd be surprised how often traders forget this rule in the heat of the moment. Remember, trading should never be a gamble with your livelihood at stake. It's a calculated risk, yes, but one that should never endanger your financial security. So there you have it. The world of risk management may not be as glamorous as the big wins, but it's the backbone of successful trading. It's about playing the long game, about knowing when to hold and when to fold. In trading, managing your risks is just as important as making profits. Trading is a journey of continuous learning. It's a mantra that successful traders live by, and for a good reason. The world of trading is as dynamic as it is complex, and the only way to navigate it successfully is to keep learning, keep growing, and keep adapting. Let's take a moment to unpack this. Think of the stock market as a vast, unpredictable ocean. The currents, the waves, the storms, all these factors constantly shift and change. To sail these waters successfully, you must be equally adaptable. You need to keep an eye on the horizon, interpret the signs, and adjust your course accordingly. This is where continuous learning comes into play. It's not just about reading books or attending seminars, it's about staying updated with market news, understanding how global events affect your stocks, and being aware of the latest trends and technologies that could influence market behavior. But continuous learning isn't just about absorbing new information, it's also about learning from your past, your mistakes in particular. Every setback is a lesson waiting to be learned. Did a trade go wrong? Don't just brush it off. Analyze it. Understand what led to the loss. Was it a flaw in your strategy, or was it an unforeseen market fluctuation? Once you've identified the cause, you can take steps to avoid repeating the same mistake in the future. Finally, continuous learning involves constantly refining and adapting your trading strategy. The market is not static, and neither should your strategy be. As market conditions change, your approach should evolve too. This doesn't mean you should change your strategy every other day. Rather, it's about making thoughtful, data-driven adjustments to improve your trading performance over time. Remember, in the world of trading, complacency is your enemy. Even the most successful traders never stop learning, never stop improving. They know that the moment they think they've made it, they've already lost. So stay curious, stay vigilant, stay hungry for knowledge, and you'll stay ahead in the game. Trading is a test of your emotions. A profound statement that holds immense truth in the world of trading. It is a battlefield where your greatest opponent is not the volatile market or the shrewd trader on the other side of the screen, but your very own emotions. Greed, fear, euphoria, disappointment. A trader's journey is a roller coaster of these intense emotions. Each one has the power to cloud your judgment, to make you deviate from your well-thought-out strategy and to lead you down a path of impulsive decisions. Let's talk about greed, the dream of making it big, of hitting that jackpot trade. It's a powerful motivator but can also be a dangerous trap. It can push you to take excessive risks, to hold onto a position for too long in the hope of squeezing out that extra profit. But remember, every trade is a balance between potential profit and potential loss. Letting greed dictate your decisions can tip that balance and leave you vulnerable. Then there's fear, the other side of the coin. It can paralyze you, stop you from taking calculated risks, make you sell too soon out of panic. Fear makes us focus on the possibility of loss, often blinding us to the potential of gain. And let's not forget about euphoria and disappointment, the highs and lows of trading. They can make us lose sight of our long-term goals, make us forget that trading is not about one successful or unsuccessful trade, but about consistent performance over time. So, how do we navigate this emotional minefield? The key is balance. Recognizing your emotions, understanding their impact, and then consciously choosing not to let them control your decisions. It's about staying calm under pressure, about sticking to your strategy even when your emotions are screaming at you to do otherwise. Remember, trading is as much a mental game as it is a financial one. The market might be unpredictable, but your response to it doesn't have to be. Master your emotions and you'll master the market. The right tools can make a huge difference in your trading journey. Imagine trying to paint a masterpiece with a toothbrush. It's possible, but wouldn't it be easier with a proper artist's brush? This analogy holds true for trading as well. The tools and platforms you choose to utilize can greatly impact your trading experience and overall success. The trading platform is your command center. It's where you'll execute trades, monitor markets, and analyze trends. Therefore, it's crucial that the platform is user-friendly with a clean and intuitive interface. You'll be spending a significant amount of time on it, so you want it to be as seamless and easy to navigate as possible. Next, consider the fees associated with the platform. Fees can eat into your profits, so it's essential to choose a platform that offers competitive rates. However, don't be lured in solely by low fees. You must also consider the features and services the platform provides. Customer service is another key aspect to consider. You want a platform that offers reliable and efficient customer support. After all, in the world of trading, time is money. If you encounter an issue, you'll want it resolved swiftly. Additionally, look for platforms that offer comprehensive educational resources. The world of trading is ever evolving, and continuous learning is the key to staying ahead. These resources can range from tutorials, webinars, to real-time news updates. They'll keep you informed and ready to make educated trading decisions. Moreover, a platform with a variety of analytical tools can be a game changer. These tools can help you identify trends, track market movements, and make informed decisions. They are your compass in the vast ocean of the stock market. Lastly, consider the platform's security measures. After all, you're entrusting it with your hard-earned money. A platform with robust security protocols can give you peace of mind and confidence in your trading journey. Choose your tools wisely, for they can make or break your trading experience. Remember, a skilled trader is not defined by their tools, but how they use them. So equip yourself with the right ones and set sail towards your trading success. Trading stocks for a living is not a walk in the park, but it's not rocket science either. It's a blend of knowledge, strategy, and discipline, seasoned with the right tools and an unyielding spirit of continuous learning. As we reach the tail end of our journey today, let's take a moment to reflect on the key takeaways from our discussion. First and foremost, understanding the stock market is crucial. It's the battlefield where you'll be deploying your strategies after all. Remember, the market is a reflection of countless factors, from economic indicators to company reports, from global events to investor sentiment. Therefore, keeping an eye on these aspects can help you make informed decisions. Next, we delved into the importance of having a robust trading strategy. It's your game plan, your blueprint. It's what guides your decisions and helps you navigate the choppy waters of the market. Whether it's day trading, swing trading, or long-term investing, having a clear strategy is paramount. Risk management, as we discussed, is the shield that protects you from potential financial blows. It's about knowing your limits, setting your stop-loss orders, and never putting all your eggs in one basket. One cannot overstate the role of risk management in successful trading. Then we highlighted the essence of continuous learning and improvement. The market evolves, trends change, and new strategies emerge. As traders, it's essential to stay on top of these changes and constantly refine our knowledge and skills. Emotional control, another critical aspect, is about keeping your cool when the market gets hot. It's about not letting fear or greed dictate your decisions, but instead relying on your strategy and analysis. Finally, we discussed the significance of using the right tools and platforms. These are your weapons in the stock market battlefield. From charting tools to trading platforms, choosing the right ones can make a world of difference in your trading journey. Remember, every successful trader was once a beginner, so equip yourself with knowledge, plan your strategy, and embark on your journey to trading success.